You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you for being here. As I record this podcast today, it just so happens to have been 4th of July, just a few days ago. I hope that you all had a wonderful Independence Day with your loved ones out there enjoying however you celebrate. I hope that it was great for you. Today, I wanted to talk about frequently asked questions. And I want to do this in like a series. I'm going to start with part 1 because there are a lot of questions, and I'm going to just go ahead and do different podcasts where we are covering frequently asked questions. So the first frequently asked question I would say that I get all the time is from people who know nothing about infinite banking and are wondering what it is. So they're just asking, what is infinite banking? Now, this whole podcast has been about infinite banking, but I thought I would try to put it more simplistically for those that are still trying to get a grasp of it or have family members or friends that they're trying to explain it to. Infinite banking is a financial strategy that involves creating a personal banking system out of dividend-paying whole life policies issued by a mutual life insurance company. Oftentimes, the system over time is comprised of more than one policy. To put it more simply, what we're doing is building a pool of cash that's guaranteed to grow even as you're accessing the funds. A pool of cash that you can borrow against, income tax free, and be in complete control of those loans. What we're doing, it is really just the action of funding a whole life policy higher than the cost of the premium, the cost of the life insurance, the cost of the death benefit. Because if you're paying less into the policy, if the cost of the insurance is lower than what you're putting into it, then the difference of that money can grow more in favor for you, can grow into a pool of cash that's going to grow more efficiently for you to use instead of having cost and fees dragging out of it. So now, of course, this policy structure is unique and not everyone is skilled at building it in the best way for your future funding needs, for your plans for your life, for things you want to budget in or things you want to be able to finance out of this policy. But really what it is, you're just funding into a whole life insurance policy over and above the cost of the contract. It's building a tax efficient cash value for you that you have access to. You can borrow against it. And when you do so, your cash continues to grow as though you never touched it. So your cash value will continue to grow with guaranteed interest and dividends if it's a dividend-paying whole life policy from a mutual company. Your policy will continue to earn even though you're borrowing that exact value of funds that you have in your account, even though you're borrowing that value, borrowing against your collateral that is the cash value in the policy. And the ability for that account to continue to grow without any interruption because you're not pulling the funds out, you're borrowing against it, is very, very powerful. It is able to really experience the magic of compounding growth with no interruption. That is a big deal and it makes a big difference over time. But the idea of infinite banking goes even beyond that. And it encompasses paying yourself back, treating yourself like a real bank, borrowing funds like you would any other bank, and paying yourself back with interest. And by doing these actions, you will end up so much better off in the long run. You will have a large pool of cash, maybe more than one policy, and then you will be able to use those funds for financing needs all throughout your life for whatever you may need. You'll have access to the growth within that policy, the earnings, income tax free, and you'll be able to use it again in your retirement. Again, there are other benefits that you can access along the way if there's other needs, a critical illness, a chronic illness, a terminal illness, but also you'll be able to use the funds in your retirement years and then leave a tax-free death benefit to your loved ones. The infinite banking concept is a foundational strategy that gives you a place to house your funds in a much more safe and efficient way that's going to do way more for you than a bank account. And whole life insurance, again, is an asset. It is a cash flowing asset. So it's not an investment. Investments can lose money, remember, so we're glad about that. but it is a cash flowing asset that we can utilize as a safe place to house dollars and then build a system from which we can finance our own purchases, allowing us to have a place where we can access cash tax free and also where we are in complete control of our loans. That is also a very significant, awesome feature of the infinite banking concept, is to have control of your loans. In addition, many people use this system for financing other investments, very oftentimes real estate, but also any other investment that a client really is passionate about. So it's just a holding tank. It's going to do better than any other type of holding tank, and it's going to leave a lot more benefits for you, your loved ones. Let's face it, it's amazing. By utilizing the infinite banking concept in the correct way, funding it well, paying yourself back with interest, it oftentimes can blow actual other investments out of the water. So again, that's why I am so passionate about teaching it. I love it. And so let's move on to another question. Am I too old to start a life policy? A lot of people will think, oh, I'm too old for this. I mean, I guess the question is, when are you too old to keep control of your cash? Or when do you feel you'll be too old to have control of your cash? I feel like most people would like to have control of their cash for as long as they're alive. But certainly the younger you are, the better the numbers will be. But there are techniques that we can do to help the cash become more efficient. It will depend on your health rating a little bit too, but there are things we can try to make sure we have that cash as efficient as possible, that we build it in such a way that your policy will be as efficient as possible. So what's too old? I mean, it just depends on your goals, what you want to do with the policy and what the funding looks like. And then we'll just talk it out to see if we can address those goals, if we can design a policy that will look good, that you'll be excited about. Certainly though, when are you too old to be in control of your cash? You probably wouldn't think that you would be too old at any time. The question really is, when do you think you don't want to be in control of your cash anymore? How long do you want to be in control of your cash? To what age? Now, there are actual cutoff ages. Most companies age 80, maybe some to age 85. I used to have companies that easily went to 85. It's harder for me to find now. So there is a cutoff age for actually implementing this when you are much older. But usually it can work out pretty well for someone of almost any age. I will add that starting as young as possible is definitely a good idea. People often ask too, is it too much for me to start a policy for my child? Is it a good idea? Is it a bad idea? If my child is 1 year old or whatever. I started policies for my kids basically when they were born, just after that. And so starting as soon as possible is always a good idea. As soon as you learn of this and you want to learn more, certainly today is the best time to start. So you have that extra time, as much time as possible from the day you learned of this strategy. Your time is your best friend. And children, babies, it's not too young for them. It's a great idea for them. It's awesome for you to have that, put that together for your children. They're going to have that awesome treasure and gift from you. You can be in control of those funds until you want to turn them over. If they have their own policy, you can control all that and then give it over to them when you feel that they are responsible, or they will automatically take over that policy when you pass away. But certainly it's an awesome gift. It will grow tremendously and very well for them. And into their retirement years, it'll just be awesome if they keep it. So you'll want to teach them to make sure that they keep their policy and keep funding it once you do turn it over to them. It only gets more amazing. And the younger that you start, the more amazing that it is, because you have more years on your side. So of course, the policy will grow more with more years on your side, but certainly we can make a policy work to meet our clients' goals, even for those in their older years. So another question, how long is the underwriting process? There is something called accelerated underwriting, which would allow you to skip the nurse visit. Generally, when you're underwriting for life insurance, a nurse will come over and take blood and urine, and they will ask a bunch of health questions. And there's also health questions in the application. So you'll take an application with an agent. They will ask you health questions oftentimes, or have another company give you a call to ask those medical questions. Then a nurse comes over and takes the blood and urine. And so oftentimes it's up to you, because you have to be the one to schedule that nurse visit. And sometimes people take a while to do that. And if they do, sometimes the schedule for the examiner is already booked up for a while. So you want to get open that email or that text if that's how you receive that message, or call them back to schedule as soon as possible, because then it's up to you. You can choose what date you want them to come, but at least you have the option of doing it sooner if you don't want to have to wait in case they're already busy. So usually that will happen, but there is, again, that accelerated underwriting process where you can skip all that. If the death benefit is under a certain amount and you feel you're pretty healthy, again, things are pretty good for you, you can just fill out the health questions together. If any red flags, though, the underwriter would then order that nurse visit. But sometimes if the health is pretty good, we can do that. And then with that accelerated underwriting, there is a soft credit check. It doesn't affect your credit, but there is a soft credit check. That's just part of that underwriting. It's just something they look at because they're not looking at the full health that they normally would and taking your blood. So they're looking at whatever they can. They'll look at your motor vehicle record, your prescription record, a few different things. And with accelerated, you can be approved very quickly in about a week and then have that begin. When you have the nurse visit, depends on when you schedule that. And then sometimes you maybe will have a red flag with an underwriter and they'll request medical records from the doctor that you saw for that particular condition. And so then the doctor takes a while because they're in no hurry whatsoever to send out those records. So sometimes it helps if you give that doctor's office a call and just ask them to rush that and send it along, especially if they've been ignoring it for a while. Having you call the doctor's office and asking them to process that request with the life insurance company oftentimes does speed it up and helps it to get pushed through. Otherwise, that can take a long time, maybe even a month or something if they're just in no hurry whatsoever. So with accelerated underwriting, it could be as short as a week, and full underwriting could be, I would say, the quickest is about 3 weeks, up to maybe 2 months. It just depends on how soon you're getting that nurse visit completed and if they need any medical records from your doctor. So you don't always require a blood test. That's another question. Do I have to have a blood test? With full underwriting, you do, but you don't always. If you have that accelerated underwriting, you can maybe bypass that. And sometimes people will ask, well, I just went to the doctor. I just had my blood drawn. Do I need to do it again? Can't you go to my doctor and get that information? I just did a full workup. And the answer, unfortunately, is no. No, they don't really care. They're happy that you're going to the doctor and they're glad that you're taking care of your health by making sure you're doing okay. But that is not sufficient for the company. They will want their own third-party lab company to come out or meet with you, or you can find a location nearby and go to the company yourself if you don't want the nurse to come to your home or your workplace. But they do want that third-party company to complete the lab work. They will not accept whatever was just completed at your doctor's office or for you to go there instead of the lab company. No, they're going to want to use their own examiners. Okay, well, that was a handful of frequently asked questions that I hear all the time. There are certainly more than that. I will go over again. I will do this in a series so that I'll cover some more questions at another time. I hope this was helpful. I hope that you were able to have some of your questions answered, or that this helps you answer questions to a loved one who's wondering the process. As always, if you would like my help to put together a plan for you and or your family members, please reach out to me at Valerie@alphaomegawealth.com. I hope this next week is good for you and that you're enjoying your summer. I'll talk to you in a week. Take care.
This is thepodcastfactory.com.